Yo, what's going on, guys? Welcome back to another Ivy League lesson. So today we're going over the breakout strategy, which is a very simple, very profitable, very easy to identify pattern and strategy. So anyways, let's get right into it and I'll show you guys how to trade it. Okay, so the breakout strategy, I'm going to go ahead and show you guys and demonstrate on NAS. Probably one of my favorite and one of the easiest strategies that I've ever used and the most profitable. So when we're looking for a breakout strategy, let's go back. You can do it pretty much on any time frame, but the higher the time frame, the stronger the move and the more likely it's going to go that way. Also, too, if it comes to a level of like huge resistance and it starts consolidating, what you're going to do is look for consolidation, like tight consolidation, like right here. So for instance, this would be like a breakout strategy move. So what you're gonna do is look for consolidation zones and look for the exact top and the exact bottom, or the most consistent top and most consistent bottom on those two. So right here we have our height, and right here we have our low. So we do have one break right here. That's okay, because there's only one. Most of the time the price closed above this, and then price closed below this top one. So once you've identified your top and your bottom, what you're able to do, and most likely it's gonna go with the trend, unless it's really, really, really overbought or really, really, really oversold. So in this scenario right here, we have that consolidation after a large push up. So we can either buy it up or sell it down. Now for the breakout strategy, we don't necessarily want to do either or in that zone. What we want to do is put a buy stop, and I'll make these lines green so you guys can see them. I'll make them green and a little bit skinnier. So that's not green enough. All right, so typically what you do on a breakout strategy, you're gonna place a buy stop above that breakout zone, that breakout key level up top, and then a sell stop below that zone. Now, if you just wanna take one and not risk the other, because obviously it does have potential to come down and then back up, right? But typically when you do this, and I'll put my stop losses as pink, so you guys can see them as well. Typically, you can run your stop loss pretty tight right above that zone or right below the zone, depending on what it's going to do. So let's say our move does continue up like it did here. Your buy stop would have activated and your sell stop would have been below that high. So you would have been able to catch this whole entire move here, okay? And where you take profit is typically at the next zone or the next high up. Also, too, I'll make another video on quarter points, whole points, half points. You guys can also use that as more confirmation as where to pull out. But typically on these breakout moves, you're risking very little to make a lot. Usually it's like 2 to 1, 5 to 1, 10 to 1, risk to reward or better. So on this here, if this would have sold, right, let's say it came down to here, your sell stop would have activated here, and you would have risked a very minimal amount above that high. And either way, it would have worked out. You wouldn't have caught both. And also, too, if you would have lost this trade, you're gonna lose a very, very, very small amount. Now I'm doing this on NAS. You can use it on any pair, and let's go ahead and do it on another. Let's find another breakout zone as well. Okay, so let's go to something more current. Okay, so something like this, right? This is an example of where it would have worked 2 different times, but also would have been more like a more quick trade. So we have our top here. We have the most touches consistently on that price. We do have that one break. And I'd say we have the bottom right there. So this zone right here, right, if we had this and you had that buy stop up top, it may have triggered it and you may have lost that trade. But again, you lose very, very little. Same thing here. It would have given you enough time to place your stop loss on your entry, because on this specific case and on NAS, this dropped about 500 pips on this move right here. And I do most of these in the 1 hour time frame, because 1 hour time frame is my favorite day trading time frame, and that's the one that I use the most. I do my analysis on the weekly, daily, 4 hour, and 1 hour, but I usually place trades on the 1 hour if I'm day trading. So again, you would have been able to take this buy stop here, probably would have triggered and probably would have stopped you out. So you would have lost, in this scenario here, 31 to, so you would have lost 300 pips in this case. That's okay, because we can't win every trade. Losses are part of the game. We have to accept our losses, move on, make up for them, double them, triple them, whatever. This one here would have given you enough time because you're already 500 pips in profit. So at that point in time, you should have already moved your stop loss at least to your entry or slightly in profit. Because that way too, if it had continued to go down, you would have caught that move. Now this one here, once you saw it came back into this consolidation zone, right? You could have done it again. Sell stop below and buy stop above. So in this case, would have been able to catch this move up here. And then again, you could have caught it again, a second entry on this retest of that high. This one here. So you could have bought there again with stop loss slightly below and then caught this whole entire ride up. Or, even if you didn't catch the whole entire ride, you could have at least caught a few hundred pips, 500 pips, 700 pips on NAS itself. So you guys, that's pretty much the breakout strategy. What you're gonna look for, like I said, again, consolidation, right? We have consolidation, and then you're trading the breakout of that consolidation. Now, another thing too, really quick, if you don't feel comfortable running pending orders, you want to live trade it, you can market execute it. Just typically you get a better entry with that sell stop or buy stop in case the candle starts to, strong breakthrough there. Especially when there's more volatility in the market, you're going to want to probably run a pending order, because I found more often than not, they are more successful than market executions. Or you get better, you get better positions when using pending orders in this situation. If you guys have any questions or anything like that, you guys want to know more about it, if there's anything more in depth, this is basically the breakout strategy. And then again, you can either take profit at your next zone down or up, depending on which way it moves. Anyways, hope you guys enjoyed, and see you guys in the next one.